Welcome back, ladies and gentlemen.
Hello, how's everyone doing? Hope you had a great week so far.
Great to have everyone back. It's been a little bit of a hiatus. We've been on a little break.
Yes, yeah. Schedules get a little crazy sometimes. Everybody who's listening knows how that goes, but we apologize. I know you guys missed us, and we're back for you, though.
You're just assuming everyone misses you.
Of course, I have to make myself feel better somehow.
Well, I can tell you several different ways of doing that. But it's not going to be from this particular show. More likely, you're going to probably feel a little more terrified.
Well, I'm gonna flip the script on that a little bit.
Give it
I think
opportunity.
it's going. Yes. What we're going to talk about today, guys, is so important. It is so relevant, but the goal is to find the opportunity within this. As with most things, stress can breed success.
Do you know the best time to milk a cow?
20 times later, I've heard this joke. No, when is the best time?
When she's in the mood.
Okay, nobody's laughing, just like the other 20 people.
Well, I think someone's laughing, but it has to do with timing,
Yes.
which that's why I brought up the sweet joke.
Sure.
Because right now we're talking about some changes within the code of the taxation world.
Yes. And if someone doesn't know kind of what we're talking about, I apologize, but you must be living under a rock.
Yeah, there's been a lot of conversations about the budget, 3.5 trillion, costing 6 trillion, all these different numbers. There's a lot of numbers going on. But what's actually hiding behind this is a lot of very important things. And realistically speaking, it's imperative that people understand that, in our opinion, retirement accounts are really being attacked.
Oh yeah, 100%.
They're under assault, right?
And I think we need to preface the whole entire conversation. If you or your clients are saying right now, this doesn't pertain to me, they don't have $10 million, they're not in, within the 400,000, that unfortunately is not true in any way, shape, or form. And again, it's not based off of the number, it's the legislation itself that they're trying to pass.
And the concept that's the biggest problem. So,
right.
One thing for everyone that's listening right now to really realize is the number one most trusted advisor in the financial services industry is going to be the CPA or accountant, enrolled agent, CPA. But really what people are looking for, we've shown this, we've talked about this, whether it's Google Trends or any other type of data source out there. One of the biggest, most important things that we've seen since this election of 2021, when Biden went into office, was conversations about taxation.
Oh yeah, of course.
Now it's coming to a head. And we're seeing, a lot of different things happening. We're seeing really almost like 4 different parties. When you look at the politics of this whole situation, you've got your very, very far left, big spending group. You've got your 1980s Democrats that are kind of in the middle fiscally, but socially liberal. You've got your Republicans that people would call the rhinos that are kind of Republican in name only. And then you've got your hardcore conservative groups. And now it's just really an opinion. It's going to be interesting who breaks within this thing, because, obviously there's a stalemate within the Senate, which Kamala Harris is going to be the tiebreaker if it does become a tie. But right now, Manchin's hanging strong, saying he's not going to vote for this. But we kind of want to go into what this is all about, because your clients need to know, and really so do you as the advisor, because it's imperative that you sit down with your clients, have these conversations. Because with it being about the fact that the retirement accounts are under attack, the majority of the people that you are working with right now are either in retirement or pre-retirement. They need to be aware of these things.
Yes.
So we had a conference call today, October 1, 2021. And really the conversation is around the term legislative risk, right? We talk all the time, Cassie, about how people in the financial service industry need to look at their overall risk. And that can mean, their tax risk, that can mean their financial risk, that could be market risk, that could be the risk of losing someone.
Sure.
Yeah. But this one's legislative, and it's a very important one that a lot of people don't talk about, because normally when you look at legislation, you're thinking about transportation or different things like that, and that's what they kind of are hiding this bill about.
Yeah, or something that it might affect you a little bit, but not have a major impact. So yes, legislation is changing, but how much does that really affect me on a personal level? And this one 100% can affect you on a personal level.
Well, they want you to believe it won't,
right?
Unless you're making significant money, as you mentioned before. But the reality of it is keep listening to the concept of what we're going to talk about today, because the numbers can still change. This thing's still being debated upon.
Sure.
And so the numbers can change, but the concept is what for me is mind blowing and honestly kind of terrifying. It's pretty scary what's going on out there. But before we dive into this, also keep in mind that right now, taxes are absolutely on sale.
Mm-hmm.
And it hasn't been a huge conversation for a lot of people because once the Trump tax laws went into play, it was pretty simple. And it was what it was. It was supposed to be that way until the end of 2025.
I almost think it was taken for granted that, a lot of people assumed, okay, this is set in stone now and it's not going to change. We'll be okay. And we know that is very much not the case. I mean, best run 2025, worst next year,
or even potentially this year.
Right.
Because Joe Biden has threatened to make things retroactive, the changes this year. That has been one of the part of the conversation. So it'll be very interesting to see where this whole thing plays out. But one thing everyone needs to listen and think about right now is if it's a situation where if you utilize something like usdebtclock.org, feel free to go look at it. We are almost just shy of $29 trillion in debt
already without any additional
that's just today.
And it doesn't matter. I kind of want to say, guys, it doesn't matter what side of the fence you're on. This conversation is about you being a financial advisor and how this really can affect your business by affecting your clients.
So you're talking 28 trillion. I think it's very common for people to misunderstand million, billion, trillion. They all rhyme. They all sound normal. And right now, I mean, think about the fact that we're talking about trillions of dollars of spending. 1 million seconds is 14 and a half days, right? 1 billion seconds is 32 years. 1 trillion seconds, it would have been 30,000 BC, right?
Yeah.
So now take that and make it $29 trillion.
Put that into perspective a little bit.
Yeah. Current 1 year tax revenue, Cassie, is just under 3.9 trillion, but we're spending almost 6.9 trillion. So you don't have to be a mathematician or a rocket scientist to understand that if this was a situation where, let's say someone and their husband came in to sit down with me and they said, Mike, we're in a bad shape. We don't know what to do. Right now, we're spending $68,000 a year. We're making $38,000 a year. And we have $280,000, $2.8 million in debt.
Yeah.
What do we do?
I mean, I would imagine people would have kind of two answers for that client. Stop spending.
Yep.
You need to figure out your budget.
Good place to start.
And if they are retired, go get a job.
Yeah.
You have to pay for this somehow.
And if they're not, get a second job.
Right. Yeah. I mean, you have to pay for it. We don't get off the hook just because, we have to spend more. It's a little bit of a struggle. I'll get the money from somewhere else. No, you're responsible for these debts and your spending, and it's assumed that you're going to take care of it accordingly.
Now, what's interesting is we're talking about one family, right?
Yep.
So you mentioned, and you said you're responsible, which is absolutely correct. So the debt per citizen in the United States of America, including all citizens, including my 12-year-old and my 50-year-old son.
Yep.
Is $86,630. So if we stop this clock going up right now and just said, okay, reset, everyone pay $86,630, every citizen would have to pay that amount of money.
Yeah, I don't think that's happening for some reason.
Well, how many citizens are paying taxes? Is it 100%?
No, yeah, it's not.
So when you look at it, the debt per taxpayer is $228,999. When you take in the fact that $21,567 is the average savings per family, and we are in a situation where we have $3 trillion of deficit being added on a yearly basis, and then they come out and say, don't worry, it's already paid for. It's hard not to call BS on that type of conversation.
Right. Yeah. Yeah. I mean, you can just simply looking at the debt that's there. We know it's not paid for. And kind of how Mike mentioned, we were on an amazing webinar today, just really, learning the details of this and the nitty gritty of it. And they were saying, yes, it's, the 3 billion right now. And some people trillion. See, I don't even want to say that.
You're
number.
Not the only one. It keeps happening.
Yeah. And then other people wanted to say 6 million. And even
trillion.
if it's I'll get it right.
This
eventually.
is why you got to stop drinking before our podcast.
I know. No more Fireball. The 3 trillion, not all of that is paid for. There's already a debt within this bill. There's not enough taxes to cover that right now.
Yeah. The way the current bill is written, if you look at the scoring of the Congressional Budget Committee in office, they're saying it's already a $600 million. That $600 million deficit the way it is right now. But a couple things to keep in mind is how they scored this thing. So let's go through some specifics on this, because I think it's important that we kind of dive in and give people an idea of why we're so concerned. When you look at the rising impact on people, a lot of people think that this is just going to hit the rich. And so we want people to understand that it's not necessarily the facts. Now, I can go into trickle down economics and I can give you several different reasons why. I think we should do that on a later show, because that's a different conversation.
Keep it focused.
Although it's very important, right? The reality is, to cover this cost of this particular bill that's out there, we are going to have to raise taxation. Okay. If you go and look at the fact sheet, so when someone comes out with a legislation, they will create a fact sheet and they will let you know what the goal is of each party. When you look at the fact sheet, and I quote, okay, the tax focus from the Democratic Party right now, it says, is to, and I quote, avoid subsidizing retirement savings once retirement plans get too big.
I wrote down the exact same sentence and I have an exclamation point next to it. Let's say that again.
So they want to avoid subsidized retirement savings plans. Well, retirement savings once retirement plans get too big. So think about what that means. They're literally coming after retirement accounts. Now, what they're talking about right now is a big number, right?
Yes,
they're
saying
$10 million number. Right. You add your Roth, you add your IRAs, you add any retirement
401k,
plan, 401k, SEP, simple, whatever you're using. Those will all, if they equal over $10 million, they will stop subsidizing. What's important to realize, it's not the number. The number's not the important part. Keep in mind that when we had 9/11 hit, which we just went through an anniversary of that.
20 years.
When 9/11 hit, we started taking notice of people's transfers that were more than $10,000 in banks. Now this bill wants to make it 600.
600. Yes.
Once you've created the concept, once you've done what Chris from our office said, once you've opened and you framed out where the door is, you have now opened it for other opportunities. And if you think that this is only going to be for people who make $10 million or more, I would highly argue that that's not going to be the case.
No. And a lot of people, are on the Hill are saying the exact same thing, that, it's starting at 10 million, but if this gets passed and there's the framework, there's nothing from stopping them from going to 5 million, to 2 million, to 500,000.
Sure.
And the scary thing is, so what is it? One of the things is that they want to introduce a new RMD.
Well, and keep in mind, before you even go into that, because that's even more terrifying.
Yeah.
The thing is that you mentioned there's two ways to get out of this debt, right? One was to earn more money, and the second was to spend less.
Right.
Part of this bill is not spending less. We are spending more. So now you're basically saying, go keep spending on what you're spending. In fact, Cassie, what I think you should do is go get another credit card, spend even more. But what you need to do now is get a third job or borrow from your parents.
Yeah.
You know what I mean?
Or take a loan from a bank and put some interest on it. Then you can own even, or, add even more to it.
Put yourself in the hole. And you know what happens to people that do that? They end up in a situation called bankruptcy. Now, the $10 million number is important because, and before we dive into that even more, this is an absolute fundamental shift. This is a gigantic fundamental shift in how we treat retirement plans.
Yeah.
In fact,
and it's never reared its head this way.
This is a direct assault on what you've done as a retirement planner to help people, or as the consumer. It's a direct assault on that money, because the government cannot afford to make this bill even somewhat reality without attacking what you've done.
Right. Well, and it's such, a play, because people have been taught, you work really hard, you save for your retirement. Everyone's doing the responsible thing if they're putting this money in an IRA, contributing to their 401k. That's what we've been taught to do. And it's a great idea. And now the government is saying, wait, we get to change the rules on this because we need more money.
Yeah. And now we're going to pick an arbitrary number, which can change whenever it wants. So basically your clients are tax deferring, knowing that the government's going to decide whatever the hell they want from your IRA and qualified plans.
And you have no say in it.
You're out of control. Right now, you mentioned the new RMD that's coming out. So keep in mind, we are all aware of the normal RMD that at 72, you have to take a certain amount based upon your life expectancy, right?
Yeah.
This RMD is not age-based, correct?
No. So it's actually based on your asset size. And again, these can come from qualified and Roth, your IRA, your 401k. And the way that it works is once you hit that 10 million, first, number one, you can't contribute to it anymore.
Correct. You're done contributing.
So no
Absolutely.
more growth. Even if, you're still working that job, you can't put any more money
No
into
more
it.
tax deferral, no more of the protection that you get from these particular plans.
And then the way that they're working with the RMD, and I don't know if I had said this already, is that there is no age associated with it. So this is not 72. So if you're in your 40s, your 50s, and you worked really hard and you have that $10 million, you are going to have this RMD. And the way that it's working is when you have something over your $10 million, so let's say you have $1 million more, so you're at $11 million, the government is taking that RMD 50% of what you are over.
Yeah. So you have to take a 50% distribution of the overage.
Correct.
So to keep in mind, if you had 11 million, as Cassie mentioned, you are required by law to take out $500,000, and they don't care what age you are.
Nope.
And you will also pay taxes on that number.
Correct.
Okay. So this is a gigantic issue that's out there because there's no age range. So for your small business professionals, your dentists, your doctors, your
lawyers, whatever,
your Henrys, your high income earners, not ready to retire. These are the people that this could have a huge impact, because what's $1 million today? It could be $10 million, could be equivalent to that in the future due to inflation, especially the way the hell it's rising now. Right. So this is, again, a huge issue because you save too much. You
save too much, and now we're going to penalize you.
You did the right thing.
So you can't add to it. So
Social Security doesn't cover for enough, but damn you for saving.
Yeah. So even if you had the funds to replace that $500,000, you can't. If you are over that $10 million, you can't contribute to it anymore. And they're just taking. So $11 million. Yeah. Obviously you don't want to pay $1 million, but you'd be tapped out there. But think of the 13, 14, 15. And you keep saying, right now it's 10 million. But with legislation, guys, we have to remember, and, we've heard people say this and I love it. It's written in pencil. So it's very easy for the government to change this number once that structure is there.
Very Becky Swan.
Very Becky.
Yes, very Becky of you. I like it.
It was a good one.
It's true. And so we'll just steal it and use it. It's good stuff.
We gave her props.
Yeah, we did. We cited her on that one. But, the other thing too is people will say, well, I'll just do my Roth. Well, keep in mind your Roth is part of that number, and part of the new bill eliminates backdoor Roth conversions. Now there's a debate on that. Some people have said that it's going to stop it based upon an income. I've also read other places where it says that it's not income based at all. Backdoor Roth conversions could be a thing of the past at the end of 2021. These are big, big changes that your clients need to be aware of. Now, where do you go? Well, as an advisor, contact your clients.
Yes.
Right. Because I'm going to contact mine, and I'm going to contact people that are not my clients right now and let them know. And if you're not doing it, they're going to hear it from me. They're going to hear it from another advisor in your area. The most important thing to people right now, the number one concern that we're seeing is taxation. Mm-hmm. Okay. So be a leader in that. Let them know what's going on. Do your research. Take some of this information and explain this to people so that they can make decisions on purpose rather than by accident or once it's too late, right?
And again, even if you don't, if they don't have that $10 million, they need to be aware of what is happening. And then it also positions you in a light that what's going on. You're staying on top of the situation, you're educated, and you're there to help them. So the number kind of is, irregardless right now, it's communicating with your client to let them know what's happening, how they could be affected, but more importantly, that you are there to help them and guide them.
Yep. And so when you look at this, as Cassie has mentioned earlier, and I think I may have said something too, the most important thing right now for the politics aspect of it is they want to pass this bill. Mm-hmm. And so when you look at this $10 million number, most of you out there listening say, well, that probably won't affect a lot of my clients. Right. Your clients will probably say, well, that's not going to really impact or affect me. Keep in mind, what they're trying to do right now is just pass the damn bill. Mm-hmm. So it's okay to say $10 million because of that exact reason. They're going to say this bill's not going to really impact many people. It's not going to have that big of an issue. The majority are going to be okay. Don't worry about it. We've picked this $10 million number, which with all due respect is an arbitrary number. It's not going to be a big deal, but what about next year? Mm-hmm. Because when you look at this bill, keep in mind the way that they've built this bill out and the way that they've tried to make it 3.5 trillion is a lot of the new welfare programs and a lot of the spending that comes along with it. They only showed it working for 3 years.
3 years.
So
3 years.
how many of you out there listening right now believe wholeheartedly that the government's going to add more to Medicare and Medicaid spending and then take it away in 3 years?
Yeah, they're just going to stop it. Here you get a little bit of extra money. We're going to help you out. Oh, our 3 years is up. No, they're going to do the exact same thing that unfortunately they're doing right now. They're implementing new taxes, and kind of how we said that number is going to go from 10 million to 2 million. You know, who knows?
It is not fair at all. And it's not, they're being very disingenuous when they're looking at this argument saying that this is what it's going to cost, because you and I all know this will never be a 3-year commitment. This is going to be much longer. How are they going to do that? Offer people for the next 3 years and to say, now we're just going to cut the hell out of this. It's just, I don't see that happening. I think the price tag is absolutely false. I don't believe it in one bit. I think it's a matter of where they had to put those artificial limits in there so they could make it hit the right price point.
Sure.
To try to make it sellable, even at $3.5 trillion, which is insane.
Yeah.
But that's what they're trying to do. So what they're also going to say now, though, and it's also a false narrative, is by doing this, we're going to create so much revenue as a country that we're going to raise the tax revenue that's coming in. We've seen this.
Yeah.
I mean,
it's going to pay for itself once all the infrastructure is done and there's jobs, and it's an awesome idea and mindset, but I think that's kind of living in a rainbow land.
Well, it hasn't worked.
No, it never has.
So when you go back and look at it from what we went through 2007, 2008, and we added all the stimulus in, we were pumping money in left and right in this economy, and it still didn't just jump back. We put trillions of dollars of money in that we had to print out of thin air and straddle the rest of our lives with this freaking debt, $7 or $8 trillion, which is owned by other countries.
Yes.
Right. And it did not spark it. It did not crush it. So I have a hard time believing that that's going to be the saving grace for this whole thing.
Right.
So
yeah, that, you know, once this is all implemented, you know, the economy is going to go up. Everybody's going to be working. You know, your GDP is going up.
GDP is going down.
Going down. God, my brain's not working today. Maybe I do need more Fireball.
It might actually work. But you know, one thing that they didn't talk about with anywhere in this bill, this is actually some of the good news. You know, they never discussed one specific 4-number deal. Do you know what that was?
I do. Do you want me to say?
Go for it. I'll give you that.
And we've talked about it, guys. We are talking about the tax code 7702. And if you are not familiar with what that is, it is life insurance.
Yep. It's based upon cash value life insurance.
Yes.
Is not subjected to any of these issues. It's not going to be a situation where you can or cannot contribute based upon age or income. It's not a situation that's going to be subjected to your $10 million number or threshold that Cassie's been mentioning
or
over and over.
Your, you know, additional taxes if you are taking income from that or a loan from your policy.
Correct. So this is a big deal that we still have a tax shelter. But for those of you that are not utilizing this strategy right now, it might be time to brush up on 7702, how to utilize cash value life insurance as a strategy, because some of the big slams that people had against it would probably potentially be some of the gains. They'd be worried that you could do better in the market and this and that. Well, you know, it's going to be interesting to see how this whole thing with the market plays out. But what we've seen is right now, you might be better off protected from taxation rather than being worried about the capital appreciation.
Sure. And when
they go both ways.
Yeah. When we went back to it, you know, there's different risks. And the ones that we're really talking about today is tax risk and legislative risk. And I think that the 7702, if you're using an IUL, can really help curb
or any life
insurance, but it can really help curb both of those risks. But you just have to be educated and speak to your clients and let them know how does it work and how might it pertain to their personal retirement situation.
Now, the good news with this bill,
yes,
and a lot of people don't talk about this, but it's going to provide some new jobs. They've got $79 billion set aside to hire more IRS agents to come after y'all.
To find out where you're hiding your money.
$79 billion towards new employees to come out and say, hey, gotcha.
To audit you, to find where your taxes. We had one of our clients ask us, well, where can I hide my $2 million that are under my mattress? I said, keep it under the mattress. No, just kidding. No.
Yeah. I remember when Scrooge McDuck used to have that big vault and he was dive into it.
He goes swimming in it.
Swim through the gold.
I always thought that would really hurt.
Yeah. It didn't look comfortable at all.
But then again, it's a duck cartoon. So
fair enough.
I digress.
So, one of the big things that we can help you with, if this is something you're looking for, we're very proud of our relationship that we have with Stonewood Financial, because we have the software, the tools, the strategies right now to be able to help you and your clients really project what this means. Because I think it's hard for people to really understand what this means, especially when you talk about the percentages.
Yes.
I think it needs to be dollar amounts for most of your clients.
They understand dollar amounts a lot more than they do a percentage. A percentage can be skewed. Oh, that's not too bad. Oh, that's a lot. But when you put a dollar figure to it and they actually see that number, it's a different light bulb that goes off.
Well, a 10% loss doesn't seem like a big deal because you got 90% left, right? But if it's $100,000, most clients will shiver in fear.
They're definitely not agreeing to the 10%.
Yeah, they don't love that idea. So, I think what we need to do is, and you can call us up on this. We can talk to each other about this. We'd love to be able to explain a little bit more. I think what we really need to do too is set up a podcast or a webinar on something like this, because these are massive changes. And as Cassie mentioned before, it was kind of smooth sailing for a while. We didn't really expect a lot of tax changes until 2025. Once this election happened, we knew it was more than likely coming, but this thing has heated up really, really quickly. And now the devil's in the details, and we're finding those things out, which is pretty terrifying.
Yeah. And unfortunately, those details are not being discussed to the general public. They're not being addressed on the news. So even more importantly, as that trusted source and that financial advisor, you guys need to be having these tough conversations and then flipping it to, but I can help you. There's strategies we can do to help protect you, but you have to make that first step and, communicate with your clients about it.
Yeah. I mean, it's absolutely imperative in my mind that you discuss this with your clients, because here's what's happening. I've gone up to Capitol Hill. I've spoken to senators and members of the House. I've discussed different bills. And what most of them said to me was, oh, that's in there? Because what you have to realize is they're voting on so many different things. And they have so many different aides that are telling them which way they should or should not vote. They have not read most of these things. And it's not uncommon for them to pass legislation that can have an impact on their constituents without understanding what that overall impact can be. This is where you can come in and you can be the absolute hero. And I'm telling you, these are pretty terrifying numbers, but you can be the absolute hero, because here's the reality. Whether this bill is passed or not passed, is not the issue right now. What you need to realize, and what your job is at this point moving forward, is you need to show the clients that you are that you are able to uncover, that they are potentially into legislative risk.
And your tax risk. It goes back hand in hand.
And this is a big change. Now, people will come out and say, well, you guys mentioned cash value life insurance. It's not how do we know that that's not going to change?
Right.
And there's a really big answer for that. When you look at tax codes, which is Roth IRAs, SEP simples, those are tax codes. Those are directly impacted by the tax code. So legislation can change that whenever the heck they want.
Right.
An insurance contract is exactly that. It is a contract.
Right.
And it's a contract between you and the insurance carrier. And what we've seen from the Supreme Court, it's already been upheld several different times, is that the government is not able to come in and undo a contract that has been done
between an individual and a business. It's not susceptible to the same rules, that they can just write these bills and it gets changed.
In fact, when you're looking at a government that's so highly focused on forcing people to put money towards retirement and then debt tax the hell out of them, they did. Because the one provision in the bill too that I didn't even mention is the fact that they're going to force companies that have 5 or more employees to have a 401k with an automatic contribution of 6%. That's in there as well for you small business owners listening right now. If you have more than five or more employees, they want to force you to have a 401k, which is again going to cost an additional cost of at least 6% just for the contributions alone of your overall current payroll.
Right.
So what we see is we've seen the Supreme Court and other courts all across the country really hold up that contract relationship. But if things change post TEFRA, things like that, what we looked at, they still honored the tax code of when those people bought those particular strategies.
Yes, everybody will be, well, for the most part, everybody has been grandfathered in from the original contract. So there aren't.
It's not the most part. It is.
Yeah.
It's not even for the most part. Everyone has been grandfathered in. So these are important things to keep in mind when you're looking at a contract versus a tax law.
Yes.
These are big, big deals. So, when you sit down and you think about it, if you're deferring your taxes right now, and you're deferring them into the future, or you're recommending to your client that they do so, you need to understand that not you, not your client, there's only certain things we can do. The IRS is the one that decides how much you will pay and when you will pay. They can change the game at any given time you want.
It's always the silent partner that you don't know how much you owe until the bill comes due.
Well, I remember when I was a kid, or watching my kids, actually. I remember my older son and my younger son playing together, and they would play games. And my older son loved to change the rules to make sure he always won. Right?
Sure.
I mean, he just middle of the game. And then you got the little one comes up and says,
"That's
Dad,
not fair.
He changed the game and he changed the rules." This is it.
Yeah.
Like we're seeing it right now. I mean,
we're adults playing this game of tag where all of a sudden the rules change and you just lost.
Absolutely. So, as Chris mentioned, again, it's brilliant. We have built the frame now to open the door. Yes. Whether this passes or not, this conversation is happening.
And it's something that, it's unprecedented. We have not seen this. And I think you kind of mentioned it. This is a direct attack on an individual's retirement savings.
Yep.
No ifs, ands, or buts about it. I don't care if you have the $10 million or not. They are coming for your money.
And the numbers can change, like you said.
Sure.
And the concept is what actually is being sold. Yes. And so it's your job as an advisor to do it. To help people with this, you need to, number one, this is from my buddy Neil over at Stonewood, it's identify that risk. Mm-hmm. Number two is quantify what that means to your particular client. Is this risk something that's actually pertinent to them, something that needs to be addressed, and how quickly do we need to address it? And then you need, with the client's help, to make a plan to circumvent that risk as much as you possibly can.
Mm-hmm. Yeah, and he nailed it with all three of those. And this stuff, it doesn't have to be, you guys don't know, you don't have to read the bill in and out. I would highly suggest you understand it. But if you know your clients, their situations, if you have AUM, start looking at all these things, make those phone calls, get your clients in the office. And plus, look at it, guys, it's an opportunity for you to boost revenue and sales. And again, put your clients in a better position by taking that money and take some of the tax risk out of it.
Yeah. So for my clients that I've utilized 7702 with, one of my contact points is going to be, hey, guess what? Good news.
You're good to go.
We beat the system.
Yes.
We utilized pretty much one of the only real tax-free, tax-deferred growth, tax-free income strategies out there that's protected from the current tax legislation.
Yep.
Right. For those of you that have clients with gigantic 401ks, IRAs, Roths, Simples,
all of them,
those are all up for grabs right now. I just can't get over it. I mean, we had no intentions of even talking about this today on the call.
No, yeah, but I mean, the webinar, we've all heard this coming, but to actually hear the details and the facts and get it situated in a way that, it's not the $10 million, guys. It's the door that is being opened and the effects this can cause.
The concept is absolutely horrifying.
Yes.
So,
yeah.
So what our software does, though, is we can actually take this, put your client's personal information in and something that's going to be based upon their lifestyle. We can put those numbers in and give them an idea of whether or not they should be getting this knocked out in the next 3 months, whether it be a Roth, whether it be 7702, whether it be stay the same, whatever the strategy is going to be. Let the numbers make those decisions and have the conversations with your clients, because if they don't need to do anything, but someone else pitches them on and they do it for no real reason, you could help them, right? If someone needs to do something, but they sit back and don't do anything, we need to help them, right? So it's a matter of making sure that you're reaching out, putting everything that you can into process so that we can really look at these scenarios. Now, the difficult part again, is this a speculation still, but it is supposedly going to be voted on by the House today. Numbers can change. Again, I cannot stress this enough. What terrifies me is just the fact that they're even talking about the assault on their retirement accounts like they're talking about. That was holy grail money. That was money that was supposed to be protected from all these different things.
Because you did the right thing. And you say,
and Social Security didn't keep up.
Right.
Social Security didn't keep up. Pensions got beat up. All these different things have happened. And now, because you saved and you did the disciplined thing, they say, well, now we're going to pick a number where it's too big. Here's the other thing. With all the facts that we have, Cass, there's a lot of stuff that we still don't know. Like, we don't know if there's over $10 million, where they have to take it. Do they have to take it from the Roth?
Right.
Do they have to take it from the traditional? Doesn't say that in there right now. We don't know if it's $10 million as a combined household, or is it $10 million as an individual? We don't know if that stuff's going to be portable. What happens if it's not per household, it's individuals, but then the one individual passes away, the other person inherits it? What does that look like? There's a lot of these other details, fine details, that we don't necessarily know yet, because oftentimes they say you gotta pass the bill before you can read it.
Ugh.
Ready,
terrifying.
fire, aim.
Yeah, exactly. Well, and we didn't even mention, you know, a lot of people with the 400,000 that you're bringing in too. There's things within the bill about how much you can convert to a Roth or the IRA.
Stuff. Yeah.
Right. Yeah. So, you know, we keep kind of throwing this $10 million number out, but that's not the only thing that's going to be affected. I would imagine there's plenty of households that do bring in 400,000 or more, and their retirement savings when they're trying to do something right is going to be affected too.
Yeah. I mean, we're focusing solely on the retirement aspect of people who have the money right now, but she's 100% right. There are other dimensions to this tax bill that we don't even have time to touch on today. Maybe we jump into those next week. And maybe we'll have more clarity next week, but there's a lot of other things. Like I mentioned, the 401k, proposal where they want to force 6% contributions for any companies over 5 people. And if you own more than one company and you have 2 people in 3 different companies, you're still over 5 because it's going to be a like owned company. So these are big things that we need to look at, really need to address, so that you can go out there and build your practice and do what you need to do. But your clients, folks, man, they need you.
Yeah.
They need you right now so much.
And it's not, it's not crazy. You don't have to. So maybe you don't have to necessarily make a phone call to every single one of your clients. If you have high net worth individuals that do have this 10 million, I definitely would give them a call so you can discuss it, but shoot a quick video, put an email out there, tell people if they have questions or they're concerned to go ahead and schedule an appointment with you. These can be very efficient, small touch points that you're sending to your clients and your prospects that can ease a little bit of the worry that they have and possibly provide opportunity for you to help them and close some business on top of it. So start with one of those 2 things: shoot a video, get it out, do an email, just start talking to everybody.
Yeah, I would definitely go out and try to reach as many people as you possibly can with this message right now, because unless I was in this industry and unless I searched it out, I wouldn't have found it. I wouldn't have found out about it.
All these details and
it's not being discussed. So you got to keep in mind that what seems normal to you as far as the education that you're getting and the research that you're doing, with all respect, the majority of your clients aren't getting that same type of education.
They're relying on you to provide it to them.
Exactly. That's what you're there for. That's why what you're doing is so incredibly important, and why it's so important to have, I appreciate you listening to this podcast, but telling your friends about this. If you want more information, if your friends don't know, forward them the podcast. Let them listen to our podcast. Let them get an idea. We're not, as you can tell, we're not here pitching anything. I mean, we're here to help you. If you want some help with this, we have the software, we have the techniques. You can give us a call at 877-8-MOTIVATE. We would love to be able to help you with that. But what we really want to from my standpoint is, I want to protect people out there with their retirement plans who did the right things and now come back with the game rules changing and just get smoked.
Yeah, this conversation is definitely not just for financial advisors. I think you could give it to anybody and they could understand, the severity of what's going on and what's happening.
Yeah. I mean, for me, I plan on getting off this podcast. I'll probably shoot another one for my existing clients.
Of course we are.
With the exact same reason, to get this out to them and explain to them what this can mean to them. And that's probably imperative that they come in and we at least look at their situation to see what the impact could be. It at least lets them know that there's changes coming. You're on top of it and you're going to protect them, which is really what our jobs are. So with that, I think it's been,
wow. We kind of went for the gusto, guys. I hope you got all that in. If not, luckily this is a podcast and it's recorded. If you have questions, you want to talk more in detail, give us a call. That's really loud. 772-247-4488.
I like to rock. What can I say? Rock on! So yes, give us a call. 877-7-MOTIVATE.
You got that? You sure?
Yes.
I think the music's too loud.
MotivateAdvisors.com is the website. MOTIV, the number 8, advisors, ORS.com, or motivateinvestments.com. Love to be able to talk to you a little bit more on that. If you have questions, please keep emailing them. We love answering those. We love talking to you. If you want to have a one-on-one call, we are always here to help people who are helping the general public protect their money and do what's right for their money.
Yep. Thanks for listening, guys. We will talk to you soon. Have a very wonderful weekend.
Take care, y'all.
Thanks,
talk to you soon. Bye-bye.